All right, folks, welcome back. I appreciate your patience. I'm just now sitting down to get this video done. It has been very difficult the last couple days in my personal life. Our daughter's moving away to another state, and my wife naturally wants to help her get all of her affairs in order. So that's been demanding a lot of my personal time because my wife is the boss. So obviously I have to make myself available for that. And on top of that, we had an issue with our forum. You all have discovered that we have to have a different link that takes you to the forum to log in. That was my forum host's technical issue. They had emailed me and said that there was an issue they're having with their domain forwarding. So I had to change that. I sent the email to everyone. Apparently a lot of you still aren't checking your email for that, but that was also something that came up. And this morning, Sunday morning, my 16-year-old, he's in soccer, and we went to a early game, and my intentions were to come home after the game, do the video, and then do my YouTube video tonight in the evening time. But both teams apparently weren't very sportsmanlike today, and they both went out there on the field and started throwing hands with each other. So it was kind of ruckus today. So all the players of both teams got roughed up a little bit, but it was like watching a rugby team go at each other. But anyway, we're looking at this. I'm probably going to do a video Monday evening because I'm quite certain I'm not going to get the thoughts that I wanted to communicate in this video because of all of the distractions and the things that's going on that led up to where I'm at right now. So I'm just going to kind of cover what in review we can see, and then if I feel inclined to articulate, if I feel like I've composed myself to the point where I can focus, I'll say what I think might happen. But just anticipate probably a video on Monday, but I'll let you know on my community tab if that's going to happen or not. I know I'm not going to be doing the YouTube video tonight, so that will be a video that's done on Monday evening or Tuesday during the day. All right, so here's the dollar indexes of our daily chart, and you can see we swept that short-term low here, there, and we're consolidating in here. That might lead to just a continuation lower. I don't anticipate it running higher, but if it does need to go up into this fair value gap, it needs to do so and leave most of it open, and then reject it and go down. I'd rather it not even go back up there. It needs to stay, in my opinion, below the order block right here and just work lower and then attack the sell side liquidity pool. That's what I'd like to see. But what I like to see and what actually happens later on today on Sunday's opening, remains to be seen. On the hourly chart, okay, last time we talked on Wednesday, I said that we were reaching up into that daily bearish order block and it might send it back down in and attack the sell side liquidity pool. That's what we ended up seeing. It traded that liquidity pool on Friday. Now here's when you want to think about day of the week phenomenon, because if you can see back here on Monday's trading, this whole week we've been down as we were expecting it to do. But if it trades below a short-term relative equal low here and on a Friday or Thursday, many times that can create the low of the week. But because we left these two lows intact ahead of Thursday's trading and Friday's trading, we were looking for it to trade down below there. It did hit it, but on Friday, TGIF conditions, which is, thank God it's Friday, where the rallies back up into the weekly range. So the range was from high to low, and it started pulling back up into that. We do have the daily bearish order block. I still think that's formidable on the upside, so I'd like to see it just stay lower. All in all, this is a market maker sell model, and we'll look at that more closely on the 15-minute time frame. But for right now, just notice that we did trade back up into a premium relative to the hourly chart from this high to Friday's low. Trades right back up into 7 tracing level. So it could and should, in my opinion, if it's going to remain bearish, it needs to reject this faster than it did here and just roll right on in and go attacking a deeper run below the sell side liquidity pool here, and also attack that old previous low that we shown on the daily chart. And I'll show you real quick what that is I'm referring to. That's this one right here, okay, because we already swept this one. I'm looking for it to trade below here. So I'm not trying to pick the bottom. We know the protocols that we follow here are not trying to call major tops and bottoms. Finally moving into the 15-minute time frame, You can see the market maker sell model here, a little bit cleaner. Consolidation, leaves, consolidation comes back into consolidation, reaccumulation, smart money reversal, low risk sell at the bearish order block, distribution, fair value gap, optimal trade entry, sells off, redistribution, another level of distribution in here, and then finally taking the sell side liquidity out there. Not Wyckoff, ICT's market maker model. So the Friday trading, we had New York open after London creating a short-term high, trading down, making the run on the sell side liquidity. We have a buy side and bounce, sell side inefficiency here, and it trades back down into that. So this is institutional order flow entry drill, and notice it didn't quite get down into the order block as much as we would like to have seen, but this is the power of knowing institutional order flow entry drill, because you don't need it to trade back down to there, okay? And it leaves that gap open. This is what we like to see. Then breaks higher. So this is a shift in market structure above the short-term high. Trades back down into the buy side and bounce, sell side inefficiency. Does it completely close it in? No, we like that. We like the fact that if it leaves a small portion open and then rallies, that's strength. So short-term strength sends it higher, taking out the short-term high here. Another buy side and bounce, sell side inefficiency. Trades back down into it. Another area of institutional order flow entry drill. Runs again. What's it reaching for? The previous high. So it runs through that and takes out this short-term high right there, and then came back in, closed in the buy side and bounce, sell side inefficiency. So I want to see, kind of like what we saw here, market maker sell model, I want to see the same thing here, just in a more tighter duration and time. In other words, see how this is really drawn out over a lot of candles. I want to see this one come down aggressively. I want to see all of this just squaring up positions on a Friday. Like, and all this was like short covering. Not that short covering is causing this, but it's pressuring the shorts to close. That's the difference between what I'm teaching you and what everyone else believes in. Okay, it's going higher to squeeze individuals out of their shorts, because I believe there's going to be a larger, more pronounced sell-off in dollar. And all of this here is running up. They're clearing out any trailed stop losses. And the best moves always occur after a stop run. All right, Euro USD. This is our daily chart. You can see we did trade up into that fair value gap as I mentioned on Wednesday. Beautiful delivery. Traded back up into the butt end of that level right there. That's the discount low of the fair value gap on the daily chart. Then it trades up to consequent encroachment, and then comes back down, trades back down into the mitigation, which is a bullish order block relative to the daily chart. So it trades down into that. So just be mindful of that when we drop down to lower time frames. If we do drop down, again, this level here needs to act as stiff support. We don't want it to completely close that in. We'd rather not go back down here at all and just start to move higher and attack that old high. All right, so you can see the consequent encroachment of the daily fair value gap. Trade up into that, and then breaks down. Institutional order flow entry drill, again, right in here, inside the SIBI, sell side and bounce, buy side inefficiency. Then trades aggressively down, back down into that bullish order block on the daily chart. And once we got this close, I was thinking that we were trading through this short-term low, but it wasn't able to do so. We still have a small little imbalance right there. Keep your eye on that. So if we do sell off, we might get a little bit of reaction in here. I'd like to see it trade through that and come back in to that as resistance at a later time, and then that could create another opportunity to sell short. And when everybody else is expecting this low or this low to be retraded to like support, broken term resistance, I'd like to see it trade into this and not trade back to here or here and create another opportunity like an institutional order flow entry drill like this in here. That's what I like. That's what I favor. And euro dollar 15-minute time frame, you can see again we have buy side liquidity left here. Trade up into optimal trade entry, sells off institutional order flow entry drill during New York open. Sell side and bounce, buy side inefficiency, trades back up in, leaves a small portion open. We like to see that. That's a really nice signature to keep in price a small period of time where the imbalance stays intact. In other words, it didn't go back to this low is what I'm saying. That's the part I like. That's what we like to see. We like to see it leave a small portion open. We don't want to see a bearish market come back up and completely close it in, because if it was able to come all the way back up into there, that to me indicates that, well, the algorithm is wanting to take price back up to that level, and it might rebalance there, come back down, then go higher. That's what we don't want to see. So we like to see it fail to completely close in. Okay, that's the difference between us and what Chris Laurie's group thinks about in imbalances. They want to see that close. I don't want to see it close, because this gives you intel. It gives you insight to what the market's likely to do. And look at the sell-off from that point. Aggressive. Comes back up into fair value gap here, sells off again, leaves that short-term low intact. So, do we roll over one more time? There's a lot of traders that see this 3 drives lower. That might be an accumulation pattern for them. I don't trust that. So again, we'll have to see what we get on Sunday's opening here in a little while. All right, British pound versus US dollar daily chart. Just almost made it to that old high we were looking for. It came up, again, sharp rejection above the short-term high here, and failure to get above this old high on that candle. British pound, buy side liquidity pool, lower high to the right than that of the old high. That's a low resistance liquidity run signature. The old daily high is here, and it ran through the buy side liquidity there and broke down, came back up in, sold off once more, and inside here with this order block, that's a level. If it trades back down there, that might be an area where we could see another level of accumulation. If we trade through this fair value gap, now listen, if we trade through this fair value gap and comes back up into and acts as resistance, then this sell side liquidity pool will be attacked, and then maybe even if it gets excited, we'll see this one here, and that will be a short-term reversal on the dollar. And my bearishness would be put on the back burner for a little while should these two levels be traded to on British pound. Pound dollar 15-minute time frame. Again, London rallies, creates the high, and then sells off with the optimal trade entry here with a sell side and bounce buy side inefficiency. Traded to here. Small little gap left open. We like that. It trades aggressively, creates a sell side and bounce buy side inefficiency. Small little institutional order flow entry drill on this candle here, breaks down another optimal trade entry, and then sells off. SIBI, which we traded back up into late on Friday. So it looks like it wants to come back down. Just be mindful of this area right in here. This could be the support, and it may not take out this structure that has sell side liquidity below it. They might leave that intact. But if we go below here and then come back up into it without taking these stops out yet, okay, so think about what I'm telling you. If we trade below here, okay, and we trade below it and it comes back up in, but has yet to take out these lows, this could be a selling opportunity at a later time over here. Okay, so that's what I'm saying. All right, E-mini S&P. This is the chart we showed last time, and I said that we would likely, if I was making the market for S&P, I would take it up above these relative equal highs from where we're at right here. So right in this chart, you can already see we have a fair value gap there. We traded down into it. Now this is a live chart at the time of me screen capturing it, so it's going to look different when we roll to the next one, but that fair value gap is there. Okay, and I mentioned that that's where I would take it. I would take it there, and then I would sell it off. All right, so let's take a look at what happened after. All right, so you can see the market did run off of that fair value gap there. Trades back down into the order block here. A little bit deeper than I would have liked to see, but that's okay. And it rallies aggressively. And we're going to look inside this area right there across all the indices. We have optimal trade entry there, sends it higher, taking out the buy side liquidity, as I mentioned. I would like to see it do, and did it rather handsomely. So we'll see if it wants to give up the ghost there and go lower, and then attack this low and this low, or does it consolidate more and trade higher to close in all of this? That's what I'm watching. I'm favoring the trading lower because we cleaned up all of this unfinished business here. So anyone that's been short on S&P, they would have been cleaned out by now. So inside that fair value gap, right in here, you can see the averages, E-mini S&P, Dow, and NASDAQ. But look real close, you'll see there's a divergence here and here. So as we traded down to that fair value gap on the S&P, the averages were not agreeing. So the SMT divergence there, setting up the opportunity for accumulation. Taking one of them away, we're looking at the Dow versus the NASDAQ, and you can see the strong divergence right there as we were entering that fair value gap. That's the key. We're not just looking at this overlay and say, okay, whenever it diverges, that's a trade. That's not what I'm saying. There has to be some kind of premise or underpinning that we're anticipating or expecting to see in price. The fair value gap is a discount array. So what are we thinking? If it trades down in there, it might accumulate new longs to go higher. We further believe that if we start seeing these signatures here where we have a lower low, higher low, this isn't an indicator. All we're doing is looking at the actual price of the Dow future and the NASDAQ future. And now we're looking at the E-mini versus the NASDAQ. Okay, you can see stronger, higher low here, slightly higher low here. And then you can see the divergence here with the Dow versus the E-mini S&P. Lower than this low, higher than that low. So there's the divergence right inside that fair value gap. That is smart money fingerprints. That is the real accumulation. That is the real works of what makes the ability to see behind price what it is. And it's not Wyckoff. So that's going to be it for now. I'm certainly going to make time to discuss more things and teach a little bit more on Monday. I just don't have the mindset to sit down and try to teach anything. So I'm kind of scatterbrained. So I'll tell you something extra that wouldn't necessarily be something that you're entitled to, which is an additional video on Monday. So hopefully you enjoyed this review, and I will touch base with you tomorrow evening. Be safe.